and hand you straight over to Tom. Just double check now. Can you all hear me? If you can, please just type in something to the questions box just to make sure. So fantastic. Okay, there's at least 3 people who can hear me. I'm guessing the rest can hear. 4 people. Good. Fantastic. Okay, so over to Tom Williams, everyone. You ready, Tom?
Time frames out.
This is a 20-minute. Yes.
Yes. Yeah, hi everybody, it's Tom Williams here. Thank you very much for tuning in. It's always a great pleasure. As you know, I've got Peter here and his wife Rita. Gavin's here running around doing different things. He's off again. Right, now the chart. What have we got? We've got the S&P 500, 20 minutes you say? 20-minute future. Now there's no reason why I've got 20-minute up. All these time frames will have the same message to you, although some of them may look slightly different. All right.
I'm just going to show the screen now. Is it showing? Yeah, it is. Yeah, okay. Just checking. Carry on, Tom.
Okay. Now, the market has... Can you put the 4-hour chart up?
Yeah.
It's been a bit tricky to follow. That's the 4-hour chart, look. And as you can see, it's been going up for the last... I mean, if it's a 4-hour chart, that means roughly 2 bars per day. Okay. So it's been going up for a day or two. Now, I was watching this here when this happened. And when you look at this, when you look at this area, when it appeared live, it looked like a top reversal. And it was tricky. The market seems to be under a hell of a lot of manipulation at the moment. They're pushing around something amazing. However, in hindsight, when you look at this, a proper top reversal, right, is that the second bar down, this red down bar, the volume should be higher than the previous volume on the up bar. It's actually reversed here, look. So it's not a true reversal, but you could see that in hindsight, but you've probably never noticed that when it's running live. But it's been very tricky. Lots of traders are moaning and groaning that they can't make head or tail of it half the time. But anyway, that's a reversal. It's not a true reversal because of the second down bar, the volume should be greater than the first volume. And here it's obviously the opposite, look. If you'd been smart enough to notice that, that would have warned you that it's not a proper reversal of the sign of weakness. And that may be because there's no signal up there, look. I can't remember how I instructed the programmer to do that, but I may have said not if the volume is greater than the previous volume, which is probably quite likely I did, and that's why no signals appeared. But anyway, excuse me, it's gone up there for a few days, look. Can't get the cursor to move. Oh yes, sorry. Okay, so the market moved up a bit, but there was a little increase in volume here, right? Not sufficient to worry them too much. But however, notice the very next bar, look, that's a test. There's no signal on it, but we've warned you many, many times that if you see an up move, a red signal appears like that, look, supply coming in. The volume isn't really all that high. And the next bar is a test. And there's no signal on it, unfortunately, but that is a test. When you see a down bar, right, and it closes near the high, immediately after a red arrow's appeared, and the volume is relatively low, then that means that market wants to go up. Right, went up, but there's still a little bit of supply there, or no demand, look, seen by the low volume. So they tested. They want to test. They want to test those red arrows again, look. And that's why it's gone up, look. It's not all that easy to analyze these markets. Now, what I'd like to show you is the daily chart of the Dow Jones Industrial 30. Could you put that up, Peter? That's it. Now, we've been looking at this. Rita trades this. Right. She hasn't been active for the last week or so because there's some lawyers that want her skill as a typist. She's a very fantastic typist, and she can type almost as fast as you can talk. And you can imagine in these solicitors' office there's a lot of typing going on. But anyway, so this is a Dow Jones Industrial. Right, we drew those trend lines in some time ago. Now, what's interesting is you look at that. There's definitely one thing to learn from this chart, and that's if you look once the market starts to fall, once it's hit this top trend line, look how what I call the simple trending system works. This is the opposite to the trending system that produces blue bars. And you can see immediately that this is done deliberately to make sure that as many traders are locked into positions as possible. They do not allow the market to go up, and they lock them in, and they know eventually they'll panic. And we call those traders, it's in the books, weak holders. A weak holder is a trader that if he sold right now would lose money. They don't like that, so they keep hanging on. Now, professional money know that, and they know if they keep taking it down, eventually those weak holders will get fed up and will sell. So look, red down bar, red, red, allow one up bar. Volume should be lowish, showing no demand, but it has closed almost in the middle, look. Red down bar, red, one up bar, look. You allow for that. Again, it's closed well off the high. Red down bar, down, 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 down. And this is up to date to Thursday. Right, but what's interesting is this, how this trending system works, look. You don't need any of these clever formulas or anything that requires too much brain power. You can see that they keep the price once they're in control and they're in a bear move, right? It doesn't matter, all the confusion in the market doesn't matter. They make sure that the close is lower than the close of the previous bar. And you can see here clearly. And of course the system, the simple trading system that takes it up is also here, and that works. Look, it's bars of blue, you allow for one down bar and so on. But the one going in the bear market also works, look. Now this is a great hand holder. Now we can see that we're getting relatively close to this lower trend line. Now will this go down to the low trend line? It probably will, because trends run longer than you think they will. Okay, it'll hit that trend line, and then we can tell more or less what the market wants to do. If it rushes downwards towards that trend line on a wide spread with a slight increase in volume, not excessive, and it closes near the low, then that is bearish. There's a similar bar here. See that bar there, look, a wide spread down, close near the low, slight increase in volume. And that's a weak market. And if the same thing happens again here, as it rushes towards this trend line, then you would expect lower prices. However, if it gets that area and you see stopping volume or climatic action, that's very, very high volume on the down bar, then they're planning another up move. So you can be ready for that. This is a Dow Jones Industrial, part of the S&P 500. And you can see, although the market appears chaotic, not many people know what the hell's going on, but they still managed to keep the trading system in place to protect their interests, because they'll be short. Because all of this here, right, is distribution, is weakness all through there. Now, we'd love to have you put some questions in if there are any. It certainly helps us and makes it more interesting as well. Rita's there, look at the screen.
Hello, yes, Louis says, can you review the pound cable chart? Peter, can you put that up? Is it the daily, Louis? We'll look, yeah.
Put that up, Peter. Right. Peter's just going to put the daily chart up.
No, it's B. British pound.
The Aussie dollar.
This is the future daily pound.
Yeah, there's the pound. As you can see, it's been going up. They'll follow all the same rules as any of the other charts. There's a little bit of volume came in there, look. The spread's narrow, enough to produce a signal. Right, that's not quite right, but there you are. Okay. Okay, but it's a serious side of weakness. So they said, okay, we'll have to test that. And these are the tests, here they are. So 3 red down bars. Look at that low volume. And that's a direct result of testing for this sign of weakness here. Okay? No supply, so up it goes. Up. Now, there's some narrow spreads coming in. It seems to be rolling over a bit. That looks as if it wants to have lower prices at the moment. But remember, these markets are very devious, very cunning. They're not there to help you. And they seem to automatically move against your gut feeling that you can't help forming. That's the problem. Unless you live in the mountain top and don't have any newspapers, magazines, TV, anything at all, you might get away with it, but you can't help forming a gut feeling. It's just the way things are. And they know that, and that will reflect on these charts.
Of interest, Tom, that's an hour.
This is an hour. Well, that's weakness there, look. That's been marked up there. This is an hour chart. Now, we said there was some weakness, didn't we, at the top, look? And that confirms weakness. That's an up thrust. Side of weakness. And why there's a signal on that, I don't know.
It's not truly an up thrust, is it? It's closing the middle.
Well, yeah, I suppose so. Don't forget, these signals are very sensitive. And they may spot things that you perhaps haven't seen or don't even realize that the program's looking at it. Peter just said, now that may have not come up with a signal because the close should be lower. But there's so many variations. But you can visually look at that, especially as a trader, you can see that's weakness. So you get some red down bars, down, then there appears to be a bit of buying here. However, to me it looks weak because on the previous chart I said whenever you see a wide spread down, close near the low, on a slight increase in volume but not excessive, as it pushes down and through a former area of support, which is right there, look, as potentially a weak market. But just to prove you wrong, they mark it up here, look. But there was a bit of support there. But this could easily, this could easily come off. Very easily come off. And we look at the daily chart, and it does appear to be forming a mushroom shape on the daily chart, which is a sign of weakness, especially on the daily chart, because every time the market tries to move up, right, sellers are there cutting the highs, and that eventually forms a mushroom shape, which is usually a sign of distribution.
Steve asks, is a close in the middle usually a weak bar?
What's he saying? A close in the middle, usually a weak buyer. Usually.
Very often it is. The trouble with analyzing the stock market and the charts is no definite rule that says if it closes in the middle, the market's weak. I wish it was that easy. It's sort of visual analysis. The eye can see so much more than even your gut feeling can see. And sometimes, usually, an up bar closing in the middle, that's usually suggests weakness. If the volume is very high, then it is. Okay.
Okay, Edmund would like us to look at the 6C daily chart. That's the 6C, that's the Canadian dollar.
Yeah, the Canadian dollar. Matter of fact, I remember looking at this a week or so ago because Gavin's doing these alerts. And thinking that doesn't look very strong. So this is the Canadian dollar, right? Nice move up, look. Nice move up. Seems to be petering out with no demand. Weakness. Yeah, no demand. Right, so the computer's noticed all that. Red down bar, down. See, the markets are not there to help you. They're there to run you ragged. They're there to throw you off course constantly. And that's why they zip up and down like this. I was talking to Peter a week or so ago, and I said, if you got two traders, right, one was determined to make money, and they said, right, you go long and I'll go short. You think, well, one of you's got to make money. But if you tried, especially if you're using real money, it's highly probable that you'll both lose. And it does that because the market whipsaws. It misleads you. You may have a good position, and then all sorts of fears creep in because you don't want to lose more than you have to, and so on and so on. So that's a hurdle. You've got the main hurdle of analyzing the chart. And then once you're in there, then you've got to be able to trade such a way that you can cope with the way the market whipsaws around and misleads you. But if you know the dangers, then you're more likely to succeed. But keep in mind that trending system I showed you, that and the KG chart. They're great hand holders because what they're telling you, right? You could see these trending systems. If the bars are consistently on the daily chart red, then you could be almost rest assured that you are in a bear market. And you don't want to put too much emphasis on being long. So this is a Canadian, and it's in a downtrend, look. And even here, look. You can see they've suddenly got control of this. Red, 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 red. If you ever get a green signal, if you read that text, it tells you to ignore the signal if the next bar's not up. And they're not up, looks. It's trending down. Now that last bar, it looks like there may be a little bit of buying going on because the spread had narrowed, look. It's down to fresh low ground. They marked it down to start with. It closed near the high. And the volume is not high. Thank you, Peter. That's quite right. Peter's just reminded us that this is running live. And of course, that bar's nowhere near finished yet. But when it finishes tonight, it could be anywhere. But that's if But even so, that's still educational there. If you look at that bar, right, and if the bar looks like that at the end of the day, then you must assume there's a bit of support coming.
Can we go to the Dow chart, Peter? Edmund is saying on the Dow chart, there are high volume bars on the left side of the chart around 14,800 area. Well, yes, down there, down the bottom. If price goes down on low volume, I wonder if it will be supported.
Those high volume bars, are they down bars? Well, one of the very high volume is an up bar. You can see that, I'll show you. What? I'll show you so you can see yourself. There. So that was that high volume. It wasn't an up bar. Well, normally, once a decline has taken place, right, you are vulnerable, that's all, to one or more groups of professional money thinking, right, I think we can buy into this market and make a bit of money. So you keep that in mind. And they will portray themselves with down bars, right, the spread has got narrow, and as you very often close the middle, the volume will be high. Now that particular one there, always keep in mind that volume is so important to the professional money because they can read it. Very often, a lot of that volume belongs to the previous bar. So be careful. But we can tell, if we look at this, that this looks definitely as if they're buying. Down bars, high volume, narrow spreads, hitting this lower trend line. And even there, look, that's a test by the look of it. So that was buying. They can't hide the buying. The only thing they can do sometimes, now they're notorious for this in London, where the volume today doesn't show up till tomorrow or even the next day. But because we use relative volume, we don't rely on precise figures. BSA get away with a lot of this skullduggery because everything's relative. As long as you can see, look at the chart and more or less see what's going on. And that's what's happened there. So the question was, Risa,
if it goes down to that level on low volume, is it likely to be supported?
So that's the question. Oh, I see. Right. Well, see, the trouble with that, you may be right, but the problem is that since this here, which is an obvious sign of strength, you've got other forces that have moved into the market, and that obviously looks like distribution up here. Looks like a distribution cap, doesn't it? Now that might or will affect the move down here. But if the market does get to the same level as this, and the volume is low, I would have thought that would definitely spell out there's no supply in the market, and the Dow is liable to go up again. But see how it lines the trend? That trend line's been in place a long time. So you trade in harmony with the index.
Carlos is asking, can we please look at the Russell 4-hour chart? Am I right in saying we don't have data for that? Sorry, Carlos, we don't have data for that. Would Gavin have it? No. Gavin might, but it's not available to us now. Sorry. Alex would like us to look at gold.
Right, gold it is. There's a lot of people follow gold. Yes, I think now to clear the chart up a bit, you could get rid of those trend lines there, Peter. And let's concentrate on the bit that matters. But all these trend lines are important in a way. That's better. A few less bars so I can see it. That's it. Now at least we're at the area, which is important. Now, of course, this here is a sign of strength, isn't it? There's no supply there at all, look. You've got the red down bars as it goes towards that support line. And then you get your narrow spread, look, close near the high, and the volume is clearly low. As a matter of fact, so clear it's brought signal up. Excuse me, test after shakeout. Okay, and that's why it went up, look. Whenever you see a wide spread up next bar like that, you can rest assured that's been caused because professional money have seen that very clearly and they know that market's going to go up. Okay.
Okay, for Eleni, hello Eleni, would like palladium and platinum. So this is palladium. I'd like, yeah.
Yeah, rare metal. Well, I'm afraid I've never traded this one, ever. But that doesn't mean the principles won't be exactly the same. I mean, you can see immediately at a glance that there was supply came into this. There's your high volume, look. Right there, look. Up bar, bang, close in the middle. And look, next bar. That's interesting. Next bar's up, look. But look at that low volume. It's on no demand. Professional money have clearly seen this weakness on the previous bar. Right? The floor traders have marked it up. Try to squeeze more out of it. But there's no demand. And even down here, look, you can see clearly there's some buying going on. Right? So you'll often find this with these type of vehicles that professionals specialize in. A lot of the so-called amateurs, they tend to keep away from this. And therefore, what you see is genuine principles of supply and demand, more likely. Now, the trouble with gold, there's so many amateurs in there. Very often you don't know what's going on. But even gold follows the principles of supply and demand. It'll follow the trending system. It'll follow the KG chart. But you can see that weakness there. That's liable to come off.
Yes, I've got a question, Tom. This is palladium, as you've been speaking about. There's weakness coming on that high volume up bar. It's come off. Now we've had some what could be looked at as no supply, and the market's now gone up on no demand. So what you're saying is that despite the recent few bars, the last bar's no demand, and in the background there's high volume, which is a sign of weakness. Is that correct?
That's why you've got no demand here.
And that's why you've got no demand here, says Tom.
They know this, exactly what's going on.
So the next one is platinum. Big scheme, it looks sort of similar, coming up to a previous level.
It'll have exactly the same principles, exactly. And I think you'll find that the principles, if they do appear, and I strongly advise you not to touch anything unless you're absolutely certain of what the principle going on. You should not be trading unless you know what you're trading, can see the principle involved, and you know what the result you should have. There's high volume on there, look. There, high volume. That knocks the market sideways. They've tested several times. No demand on that bar. Another test. Now they're marking it up. But because they've marked it up, it doesn't say that all this here doesn't exist. There's supply in this chart. And even here, look, that high volume on that up bar, it may be pushing through supply to the left somewhere. We don't know. But it looks basically stronger there because you've got this test in the background. And even here, this suspiciously looks like a test. Some of them aren't all that easy to see. And this here is definitely a test here, look. However, it's gone up, bang, it's hit some supply. It's knocked it sideways. Now, if this goes up on no demand, then that's a different story. Then you expect that market to come off. Okay.
You were talking about the S&P, Peter and Tom, earlier. What chart did you have on? Sorry, folks, I was late. You were talking about a test that had no signal. Was it a 20-minute? Sajid, can you remember what time frame it? Oh, 20 minutes, says Edmund. Anyway, I don't know what we can't work it out. But anyway, the question is, you mentioned about a test with no signal. Is it true that there is no signal because the close is higher than the previous close? Would that be so, Tom, in the program? Is that the right chart we've got up? No, Sajid. Yes, he says. So we'll put more bars up. And where are you referring to? Oh yeah, probably around 11.
Oh, today? Well, it's quite possible with no signal because the computer has to check 400, and I mean, yes, 400 parts of the bar and the volume to decide whether it's worth having a signal or not. So it's pretty, can be easily hit and miss. But the human mind, the brain, can see far more than that. The computer looks at 400, according to the programmer. But the human mind can probably look at thousands. But it's quite likely you won't get a signal on all the testing. However, I'm saying that, there might be a signal on the other time frames. That happens because the computer just does what it's told. And it's checking all these things. And of course, when you use a different time frame, some of those checks may be slightly different. Computer doesn't understand that. What's that, Peter?
That's just here in the middle there. There's a couple of down bars on low volume.
Yes.
After earlier we had a down bar, similar levels on slightly higher volume, so you could have construed that as a test.
Yeah, they're testing. Yeah, that's right, it's testing. And what market is this?
That's the 20-minute of the future.
S&P, right. 20 minutes. Well, you can see that they're up to their tricks here, look. They marked it up here. Right, this is an attempted shakeout. King size shakeout, look. That's usually a ploy to generate higher prices when you get a shakeout like this. That catches thousands of stops. It kicks thousands of traders out of the market. And that leaves almost a gate open and a clearer playing field for the professional money. I'm saying that, even then, they want to make sure, so they have a test look. There's a test, a signal on it.
No supply.
Yeah, no supply. If there's no supply, you're probably going to have higher prices. And that comes after that obvious whipsawing in the background. You can see that's done deliberately. That's not genuine market action. The value of the stock market's got nothing to do with it. That's just the professional money whipsawing the market around for them to try to benefit their own accounts. They're not interested in yours, that's for sure.
Sajid, you say no signal because the close is higher than the previous close, as normally a test close is lower than the previous close. That's right. So a standard basic test is a down bar, low volume, closing on the middle or the high. But tests do come in various shapes and sizes, and some of them can be up bars, so closing up. So sometimes if you're in a bullish market and there's been big stopping, you've seen massive stopping volume and you're in an uptrend, sometimes a test can look like, it can be an up bar, close up, but the thing to look out for is that most of the bar of that, most of that test bar is below the close of the previous bar. As Tom says, at some point they've gone down to that level on a lower time frame. They'll have gone down to that level, found no supply, and then taken it up and closed up. So, and Tom says that's a very good, accurate description. So yes, a test can look like that. I think various times we've mentioned, and I'm sure someone will remind me, that in the archives there is a very good webinar on tests done by Philip Friston, and it was April sometime, some year. But anyway, if you want to look at tests, that's the one to give you all the tests in all their shapes and sizes. Now there is a Park, thank you. April 2011. Yeah, we need to write that down so that we can remember it. There is a question here from Jerry. Tom, now listen very carefully. Now, it's a long one. When stopping volume comes in, one expects a brief bounce north, and then if there is a bullish move, one would expect the price to then go down and test the stopping volume. Yeah, right, he's got that. If the price is bearish, the price will go down and penetrate. Sorry. When people put questions, right. If the price is bearish, the price will go down and penetrate the stopping volume. My question, in both cases, the price goes south. So why not short the brief bounce north after stopping volume occurs? If bullish or bearish, theoretically the price should go south for different reasons. Now I know Peter's understood what I said. Do you get that?
Yeah, just my input on that is that that does happen, where the market goes north, then goes south and tests, and then it'll either carry on going south or it'll test successfully and go up. And you're saying that is it worthwhile shorting the period from after it's bounced up a bit, you get a sign of weakness so that it can come down and test, and short that temporary weakness. The only drawback I can see to that is that, because I've experienced it, is that the market may not come down and test, and then you've made a bad trade. What do you think, Tom?
Well, I mean, you may be right, you may not be right. The thing is, I would advise you never to trade unless you could clearly see a principle at work. Now, when you get stopping volume, if it's genuine stopping volume, it's going to have what they call an automatic rally, a move. There could only be 2 or 3 bars, and it may go sideways for a few bars. And as you say, it comes back down and tests that level of supply. If the supply has disappeared, then that market's going to go up. What?
Yeah, the reason why it's fresh in my memory, this circumstance, is because that happened today. The market came down, the stopping volume, sign of strength. The market went up. This is a 5-minute chart, Tom, and it potentially, a possibility there may have been a bit of weakness there. And if you'd been a bit too hasty, you might have jumped in there and thought, well, it's going to come down a bit now and test. Well, it did test, but it didn't do very much in the negative direction. It went up. So you'd have been caught out there. So I looked at that and I thought, shall I? No, I thought this, it's not worth the risk. I want to come down here now and test. If you'd seen that bar, I'm not sure that would have been enough for me because it wasn't testing down here. So does that answer your question?
No response, but thank you. It is an art and not a science. Jerry, who asked the question, yes. Let's go down here. Right, from Alex, do you use the metaphor of line of least resistance to get a sense of how the movement of stock price feels in either direction, and if it is more likely to move one way versus the other? Did you get that, Tom?
I didn't know.
Do you use the metaphor of line of least resistance to get a sense of how the movement of stock price feels in either direction, if it is more likely to move one way versus the other?
Well, this direction of least resistance occurs from the balance of supply that's taking place. Now that may change slightly from minute to minute even. The path of least resistance that definitely comes into play. But whether you can detect anything out of that, I personally don't use that. But I know it moves in the direction of the path of least resistance. And that is, the path of least resistance is where the professional money are trading in harmony with that. And you certainly can't argue with them because they can run 50,000 contracts. There's no way you're going to outplay them.
Yes, so the path of least resistance is that way until something else happens. Another force comes into the market, as Tom says. So it's doing what it's doing until another force comes in.
What's euro, dollar, Aussie dollar? Can we get that?
Euro, Aussie dollar?
Yeah.
Yeah, type in EUR, AUD. We haven't got that.
We haven't.
Slash, yeah, EUR, AUD. You have got data for Forex, I think. Are you sure? I don't think we have. Right, sorry, Hiran. Yeah, we're just about trying to see if we can get your chart up that you're interested in. We're just seeing. I thought you said it was Euro slash AUD. Oh, yeah, sorry, I'm just correcting. And he wants 1 week as well. Dash, yeah, it's all right. He's done. He's done dash. 240. What's this euro? The euro versus the Australian dollar, but I don't think we've actually got the data on that. We don't think we've got the data. Sorry about that. What about on the daily? We can have a look on the day. He actually says the weekly, so as well. So we could put that. There you go, third, fourth, yep, and put weekly. Right, we've got this chart, Hiran. Can you put more bars up for a minute? Right, he's talking about a buying climax. Can we expect a down move in the coming week? So yeah, put less right up to 20 now. Right. Tom, no. No,
I can't see any.
So, what does it look like to you? Say you can't see it.
We can't see a buying climax on this chart. Have we got the right chart? Seems to be trending up quite nicely. Thank you very much. It's definitely a little bit bullish. There's the red arrow look that we talk about. Right, if they're bullish, they'll test the market pretty quickly. Red down bar look, there's the test. Not a lot of supply there. And this one's gone up, look. But there's no climactic action there. There's no end of a rising market. This sort
of reversal-ish with a no demand, narrow spread.
Let's have a look. Well, see, you've got an up bar here. Looks like an attempt to a top reversal, but there's just not enough volume back in the move. I don't think you've got any worry at all there. That thing's trending up, look. And I would have thought that will keep going up. But you trade in harmony always with the indexes.
Can you go to the ES 4 hour for Carlos? He asked this question at 1800 hours, and he said it has a red down bar with high volume at 6 p.m.
4 hour.
Yeah.
Not 4 hour. Here? No, that looks like a test. Yeah. Are you sure it's the 4 hour?
Are you sure it's the 4 hour? Can you refresh the data, Peter?
It's all right.
All right.
We'll get 20 minutes. We'll be looking, that one, not that one, no?
No, he talks about the 4 hour.
That's the 4 hour. Refresh the data bar. I feel sure it's correct. Not sure what it is.
What bar do you mean, Carlos? Yes, we have different data anyway. The market went up after going down with the big red down bar. Is that bullish or bearish?
What was the question, Rita?
The market went up after going down with the big red down bar. Is that bullish or bearish?
Do you mean this one here? Yes.
Yeah, Carlos, we want to know, do you mean that bar there? Oh God, I'm talking to myself.
Tom, just ask Carlos if he means this bar I'm referring to now.
Yes.
Oh, okay. So, the market, we were talking about this earlier, Carlos,
Yeah.
right at the beginning. I don't know if you were in the room. If you missed that right at the beginning, it'll be on the archive. But essentially, Tom talked about this with hindsight. That wasn't a true reversal. Do you want to say any more about that, Tom?
Well, all I can say is a proper reversal is that the second red down bar, the volume has to be higher than the previous volume up, showing selling pressure. In this case, it's even lower, a lot lower. It looks like a crafty way of trying to shake the market out.
That's not normally what you'd call bullish, really.
No. Well, they look as if they're trying to shake out the market there. They get up with all sorts of tricks, and they get away with it. Who's to challenge them? And we saw the bit of supply coming in. We saw they were testing that. So this looks as if it wants to go up. I would say this is still bullish.
So, where's that gone?
You said it's going up on low volume.
So, was that Carlos?
Yes.
Yeah, sorry, Carlos. Yeah, it's saying it's going up on low volume. At the moment, it's not obvious that it's going up on low volume. On this time frame, it's not easy to say that. If we go to the hour chart, you could argue there, look, there's a bit of low volume on an up bar. But bear in mind now, on the right-hand side of the chart, the leading edge, that bar here, which is not closed or finished yet, the volume is also low. So we've got to wait to see what happens here. But this could be a low volume down bar. So what do you say, Tom, about this chart? This is an hour of the future.
This is an hour chart of the future
Of the S&P.
Well, I'll look at this now. Normally, when they do this, they try to go up, they try to go down, and finish up closing somewhere in the middle on increase in volume. It means they weren't sure of the market and were just whipsawing to test where the supply was and where the demand was. And that looks, at the moment, as if this market still wants to go up somewhat. But remember, it's Friday today, and we know from experience that they get up all sorts of tricks to give the, shall we say, the herd, or the general public, that includes banks and everything, the impression that may not be 100% correct. That's the S&P 500.
While we were looking at the S&P futures there, Eleni in the room typed in "weekly tells a story." So we've got a quick last look, or not a last look, we'll look at this chart in front of us as the last chart. It's a weekly chart of the cash S&P, and you'll notice the last bar is obviously not complete, but it might give you Tom something to say about that chart in general as to the general thrust of it. Tom.
Well, the first thing I'll notice is this buying here. This is a shakeout here, and there appears to be some substantial buying there. It's gone up on the back of that. It tends to round over somewhat, but this looks as if it's still trying to go up. Weekly chart. Interesting.
So that last bar, we can't say for sure, but it's run 95% of its time. It's actually a down bar or low volume.
Yeah, well, if that looks like a test, doesn't it? If that's low volume on a down bar and it closes near the high, that means there's no great deal of supply at that level. That would say the market still wants to go up.
Okay, thanks, Tom. So with that, we'll say thank you for coming, and we'll sign off now. So I hope you've enjoyed Tom's seminar this week, and we'll be here next week at the same time, and we're doing a newsletter tomorrow, aren't we, Rita? What about you, Tom? Yeah, so newsletter tomorrow, and if the recording comes out okay, we'll be posting this seminar on the BSA Club. So with that, we'll say have a nice rest of your week and weekend, and we'll see you next week.